The following is a paid program. Talk 103.7 WTIP and Cable Channel 7 welcome you into Financially Speaking with Jim Taunton. Find us live on radio, TV, the IBX Media app, and on YouTube. Just search Financially Speaking NC or get the link at WTIBFM.com. The opinions expressed in this show are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Securities and investment advisory services are offered through Genoa Wealth Management Incorporated, member FINRA SIPC. Now, here's your host for Financially Speaking, certified financial advisor, Jim Taunton.
Hello and welcome to Financially Speaking. Jim Taunton here, your host for the next 30 minutes. Glad you joined me. Hope you'll be glad when it's all said and done. And we have a guest lined up for this evening, Paul Knipping. He's a CFA, a chartered financial analyst with Genoa Wealth Management, and work with him on a regular basis, and can't wait to talk with him. We're having a little difficulty getting him signed on here. It has something to do with the video. There he is. Hello, Paul.
How you doing, Jim?
I'm doing better than I deserve. How about yourself?
Hey, I'm doing all right as well.
Yeah, we need to go to about a 2-minute break, and we'll start with Paul after we get back. We have a lot of questions for him, and hopefully he'll have a lot of good information for us. So no callers tonight. Sorry about that. Wait till next week, and we'll be back in about 2 minutes.
Ayden Golf and Country Club invites you to become a member. Come tour our beautiful clubhouse, ballroom, and facilities. For a quality golf experience, sign up for our discounted special membership rates, low monthly dues with no quarterly food minimum or assessments. Folks love to play golf at Ayden Golf and Country Club. Cool off at the pool all summer. Enjoy excellent food and beverages from the snack bar. Even store your own cart, unless you like to walk. Call 746-3389 for special limited membership rates at the Ayden Golf and Country Club.
My practice has been built on accessibility, responsiveness, and a willingness to be proactive for my clients. I'm not afraid to make recommendations relating to your investments and planning. I do hope all of your financial decisions are good ones, but let's not rely on hope. Let's roll up our sleeves and get to work.
Jim has attained 3 professional designations: Certified Financial Planner, Chartered Life Underwriter, and Chartered Financial Consultant, which entails 20 courses of study with examinations and a comprehensive national board exam, administered by the Certified Financial Planning Board. Jim has been practicing in financial services since 1979, which includes investing, planning, and insurance to help you meet your financial goals. Among the many awards Jim has received in his career is his selection to the Guide of the Top Financial Planners by the Consumer Research Council of America. So if you want to work with someone who is working for you, call Jim at 756-4700 or email him at planning@financiallyspeaking.com. That's 756-4700 and planning@financiallyspeaking.com.
All right, welcome back. Paul should be in that lower corner, but I don't see him. But there he is.
There I am. Surprise, I'm here. I made it.
Paul, by the skin of your teeth. Paul is in Denver, Colorado as we speak, I believe. Is that right, Paul?
You know, I actually just got back to Miami yesterday. So
Miami.
I am in sunny South Florida at the moment, yes.
You know, I keep forgetting everybody works mobile now. It's just amazing.
Yeah,
so how
COVID really
much time
changed
do
the
you
game on
spend
that.
in Denver versus Miami?
You know, I spend most of my time in Miami. I go back to Denver to go to the home office, obviously, see friends, family, and clients. I go back every about 6 to 8 weeks. I go back for about 2 weeks at a time.
That's interesting.
Yeah.
I have learned something this evening. And before we get started with the great information, tell us a little bit about yourself. Where did you go to college? What degrees did you obtain? Family?
Yeah.
What's your home? That kind of thing.
Yeah. You know, I'm a Colorado native, born in a small town called Grand Junction. It's about 4 hours west of Denver. I went to the University of Colorado in Denver, where I studied finance. and I actually started working in the industry and going to school at the same time. So I started my career at Schwab. I spent some time in equity trading at Oppenheimer Funds. From there, I went to a company called Lipper, which maybe you've heard of the Lipper averages. I was an analyst there for about 4 years before getting started in investment banking. And I did that for about 2 years, 2 or 3 years, just kind of on the analyst track. And I started at Genios a little over 10 years ago as a portfolio manager, and I've been there ever since. I did get my CFA along the way, 10 years ago now, actually. I got it in 2014, and I've been running portfolios with Wes there at Genios and Axiom for 10 years.
All right. Do you have a family?
Oh, no family. Nope. I'm on the Clooney plan. Maybe a little later, you know?
I understand. Well,
Yeah.
if you marry somebody like he did, you'll be set for life.
Exactly. That's my plan. If only it were that easy, you know?
And she's beautiful too, on top of all that.
Yeah. Mhm.
All right.
She's-
First thing, Paul, today was just astounding. Beginning
Yeah.
of this year, I told listeners and have been telling clients as well that Jim's opinion, based on all the opinions that I listened to and respect, was that we would have a double-digit year this year, positive double-digit year, 10% or a little better. And man, we're already there almost. It's incredible. I mean, today was just, thanks to NVIDIA earnings, was awesome. Just talk a little bit about the action today.
Yeah, gosh, today, you know, like you said, big time day. Really, NVIDIA drove most of it. I mean, I think there was just a lot of optimism around the earnings report itself. You know, they came in with earnings growth of 200 something percent in a year. And, you know, the stock's up, you know, I want to say 250% over the last 12 years. So, or excuse me, the last 12 months. What was interesting to me about that is, you know, you kind of saw NVIDIA stock take a little bit of a dip the day before, so Wednesday, as expectations were high. And, you know, generally you'll see that on stocks if, you know, expectations are high, and a lot of the earnings is kind of built into the stock already. So that's why you see some of this, you know, buy on the rumors, sell on the news kind of thing. You'll see some of these stocks kind of dip if they've had a run up right before earnings. But this, you know, they delivered and then some. And I think that just, you know, pushed markets higher. Even the Dow, you know, was higher, which doesn't really have any AI play or that much tech in general. You know, it just kind of lifted everybody's spirits, I think.
And what is interesting to note, Paul, is I brought NVIDIA to the listening audience 2 years ago. And I bought it myself, and I'm, you know, mind divulging the facts, but it obviously has done very well over the last 2 years. I actually bought it, sold it, and bought it back, and I've held it since I bought it back. But yeah, AI is just, you know, it's the new leader. There's no question about that. And if you don't like picking a particular stock, then there are some ETFs out there that own a basket of AI-related stocks, chip makers and whatnot. And so they're good ways to play it. But you think it's going to continue for the rest of the year? What's going to happen, Paul?
Yeah, gosh, that's the tough question. You know, I think markets, I feel like I say this all the time, and it's, you know, it's even more true today than ever, but markets are in an interesting place at the moment. You know, they're coming off of last year, which was kind of surprising. You know, in October of 22, there was 100%. Every economist polled said for sure there's going to be a recession in 2023. You know, and so that's why we kind of saw markets pull back there in 2022, and, you know, rates, you know, kind of went crazy on us. There was actually a lot of reasons for that. But in any case, where we stand now, you know, looking ahead, you know, basically the way I see it, 2023, we rebounded so strongly because there was never really a recession that we thought was going to happen. So 2022 kind of shouldn't have happened. The recession never came. And so now, kind of where are we sitting now? I think we're on the other side of the recession. I think what actually happened I think we did have a recession. I just think that it happened kind of on a rolling basis. You know, we had a goods recession followed by, a services recession followed by a goods recession. And on each of those recessions, the other was going gangbusters. So if you remember, in 2020, services shut down. Everybody got these stimulus checks, and demand for goods went crazy. while demand for services, of course, fell to zero. So services was in a recession, but goods wasn't. And then we saw the reversal in 2021 and into 2022, where services went crazy and the demand for goods just wasn't really there. So
Yeah.
we kept waiting for this recession, but I think because it happened at disjointed times, I think that we just kind of didn't really notice it. And so that's why 2023 came roaring back, because really, the recession happened the way it did. Going forward, it's going to be all about inflation. I know. Are you sick and tired of? Are you tired of talking about inflation yet, or what, Jim?
I am tired of it,
you know,
but it
you
certainly
know,
is the topic of interest. But
yeah, yeah.
and the thing about the recession deal, Paul, and I shared this on the program as well. Most of the pundits that I was on webcast with and conference calls and what have you were saying that if we had a recession, it was going to be shallow and short. And
hmm
if that's the case, then a recession really is nothing to be afraid of as far as markets are concerned. Historically, even the moderate recessions haven't affected markets significantly, and if it affected them at all, it was a very short term effect, similar to the COVID 2020 effect. It's very short term, and by the end of the year, we're well above where we started. So I was trying to tell listeners not to be concerned about the R word.
Yeah, I couldn't agree more. If anything, it's a buying opportunity. Sometimes that can be a little scary, but that's what it is like
Mhm.
to buy low, right? It's a little scary sometimes, but
Yes.
to your point, recessions are generally, pretty quick, and by the time we realize we're in it, we're already out of it. So the good news is that the stock market is always forward looking, and so even if we're in a recession now, a lot of times the market is already, 9 or 12 months ahead. So
hmm
certainly part of normal market, and you need recessions. You need to kind of trim the fat a little bit, and you need to pull back and have everyone kind of re-examine and reprioritize, sort of, whether it's corporations or individuals. You need to prioritize where your money's going, and that helps it sustain for the long run, for sure.
Yeah, and what wrinkled my brow about that recession conversation was a lot of the talking heads on television, even some of the Fed people were saying that we needed people to lose jobs, for for inflation to go down.
hmm
And that's okay to say, if your job is secure, but if you're going to lose your job, that's not a good thing to hear. So I didn't want that to happen, and it looks like that the Fed has navigated it exceedingly well. Looks like we're looking at a soft landing right now. Do you agree with that?
Yeah, certainly it does. And that's kind of what makes it so miraculous, is that generally when you hike rates, you kill demand, just sort of aggregate demand across the board throughout the economy, and that means that people are going to lose their jobs. And so that's what's, like I said, so miraculous about inflation cooling off as quickly as it did, or even that it did at all, because the job market stayed so strong. Weekly jobless claims even this week came in lower than expected. New jobs came out last week, again higher than expected. So, the jobs market has really been quite remarkable. Yeah.
It has been. That's you kind of keep pinching yourself and waiting for it to bust.
Yeah. Yeah.
It's just,
And maybe,
it's been a Cinderella economy. There's no question about that.
sure, sure. And maybe it's those kinds of things that make people nervous, is, gosh, things are going really good. You kind of look out over the horizon. And to me, I actually think things actually do look pretty good. Not that there's not risks out there, but if you read some of the transcripts for these earnings calls that the CEOs just had last month, they're pretty confident about the consumer. Banks were the big bellwether. Their credit provisions and their loss provisions either were stable or went down. There was a couple banks that did
hmm
increase, but generally speaking, the consumer's in pretty good shape.
Yeah.
And CEOs are painting a pretty rosy picture, which is why you saw the lift in stock prices post earnings.
I used the wrong Disney character, Paul. You didn't catch me on it, but I said Cinderella. It's Goldilocks. It's a Goldilocks economy.
Goldilocks. There you go. No, that's so true.
It's just right.
Yeah.
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 People needed to stay invested. And they really do most of the time anyway. Twice in my 40 some odd year career have I ever sold out of the market and gone to cash temporarily, and there were significant fundamental reasons for that. And that was May of 2002 and August 16th of 2007. And at the time, you don't know if it's a good decision or not, but at hindsight, it was. But it's not something you want to do on a regular basis because nobody can predict the future. And I tell clients we have to assume that the next 25 years or 30 years is going to be something like the last 80 because there's no way to know otherwise. And if that's the case, that's how we have to invest, how we create a strategy, how we plan. And, if you have a crystal ball, good for you. But, mine's in the shop. It's not working very well. Let's switch. That's a micro look. Let's switch to the micro, so to speak. I want to pick your brain. I want to hear how you and West make your decisions. What methodology do you use? And of course, you're managing with West a number of different portfolios, so I'm sure each portfolio has its own methodology, algorithm, whatever it is you're doing. So in general, tell us, how are you making selections and making movements within your portfolio?
Yeah, well, to your point, it really depends on, which portfolio it is. If it's an individual stock portfolio, obviously, the things we look at is quite a lot different than a mutual fund, let's say. So I can talk about the stock portfolio. I can really talk about both. Would you like me to start with
Just
one or the
talk
other?
about all of it. I mean, as long as we have time, let's talk. I'm gonna skip
Great.
the mid-program break to give you an extra couple of minutes. So let's do it.
Sure. Yeah, so if we're talking about stocks, what do we do? So we run two stock strategies. I run more of a growth strategy, and Wes runs a value strategy. And my growth strategy is kind of back to basics type strategy where it's growth at a reasonable price. So really, I'm looking for industry leaders with above average revenue growth. Who basically have good cash flow conversion to earnings. So I'm looking for revenue growth. I'm looking for solid earnings growth. Again, both above average for the S&P. And I'm looking for solid margins because generally solid margins above the S&P average require or demand a higher multiple. So, that's generally what you're going to look for when you're trying to find good companies. But essentially what I look for is, like I said, growth at a reasonable price. So companies that are growing fast that aren't trading at too high a multiple. Another thing I like to look at is
when you say multiple, let's assume that people listening or watching are idiots. Okay. Multiple, what kind of multiple? Multiple of what are you looking at?
Yeah, no, good question. So companies, whether they're public or private, trade on a multiple of earnings. So generally speaking, if something's trading at a 10 multiple and they have $2 of earnings, they're trading at around $20 a share. So that's kind of the idea of, these companies trade on multiples, and more profitable companies that make more money and have higher margins have a higher multiple than ones that don't. So, NVIDIA trades at, their forward PE or if you take their forward earnings and divide it by their stock price, it's around 30. Now the market average is around 20. So you can say that, there's a 10 multiple difference between what NVIDIA trades at and what the market trades at. And you can make a case that that's worth it, that maybe it should be 20. And that's really where the subjectivity around stock prices comes in. And that's kind of what you see all the fluctuation every day is people more or less arguing over either what multiple to give these earnings or what the earnings themselves are going to be. But either way, that's kind of what you see with these price fluctuations. And so when we pick stocks, we look for stocks that aren't trading at too high a multiple relative to their growth rates and their profitability. That's kind of the easiest.
It goes back to the old saying, you get what you pay for.
Exactly. And you're looking for bargains.
If you get a 20 multiple company, but they're not on the cutting edge of new technology, then what's the growth going to look like? NVIDIA, on the other hand, honestly, the sky's the limit. We just don't know where this thing's going. We don't. It's almost. I've never seen anything like it. I've never seen anything like NVIDIA specifically, but AI in particular. So we don't know where this is going. We haven't been through it before. So it could be a phenomenal thing.
Yeah, the NVIDIA story, like you said, really the sky's the limit. where this thing goes, we just don't really know. If you think back to when the internet came out, it wasn't just AOL and these internet providers that won and that made money on the internet. The internet changed everything. And I'm sure the same is going to be true for AI, is that it's not just going to be the databases and the chip manufacturers that make money. I think it's going to change everything. And there's not going to be an industry it doesn't touch. And so, when you think about AI and what's the best place to go, I think that's a natural question to ask right now because we're so early in this thing. But really, I think a better question is, what industry is it not going to help? Is it not going to improve? And so that's why just general market exposure, I think, is going to be enough to kind of lift you on AI. I mean, I think it's going to be that pervasive.
It's kind of like what I heard on a webcast today. It's not value or growth, bonds or stocks, domestic or international. It's and stocks and bonds, value and growth, international and domestic. Would you agree with that?
Yeah, you mean as far as what it's gonna
in a portfolio, a long-term investment strategy?
I see what you. Yeah, I mean, of course, and a long-term investment strategy, of course, takes a global approach and doesn't chase returns. That's generally the first rule going through the CFA curriculum is you don't just chase returns. You got to pick a fund or pick a strategy or even a stock based on a fundamental reason, not just because it's up so much. Even though in the case of NVIDIA that worked for you, that usually it doesn't, and it's certainly not a good long-term plan.
No, I hardly ever bring an individual equity position to a client. I've never been a good stock picker historically, but even a blind hog will find a corn cob once in a while, right?
Exactly right.
Yeah.
Yeah, exactly
look at
right.
this wall hanging over my shoulder, Paul, and I think that'll go to what you were saying.
Yeah.
I think that's about as important a truism as you could have in our industry. Don't let emotions make your decisions for you. Don't get too greedy. Don't get too fearful. And that's why an advisor is really important. What would you say about that? How important is it for individuals to work with an advisor?
Yeah, I think it's imperative. I think that it's important to have, if nothing else, someone to bounce ideas off of. Because if it's just you can just kind of run. It can feel like you're in an echo chamber. So it's good to have somebody to bounce ideas off of. That's why, as portfolio managers, we generally work in at least pairs. Just again, somebody to bounce ideas off of. Also, it's nice to have kind of a guide through this process, as really the market is in so many ways just a reflection of the human psyche. And that's why, to your point, it hasn't changed in 80 years because really human behavior hasn't really changed so much in 80 years. It's still humans that control the market, still humans that run the market. And so that's why this mechanism that is the market is going to, be irrational sometimes because the drivers of it can be that way. So it's important to take a long-term approach for sure.
Paul, I guess AI is kind of like crypto. I don't fully understand it, but I kind of know a little bit more about AI and what it can do for you. I actually have had some experience utilizing it in my business, and that's through a system called Levitate that I use for sending out emails to my clients. I can select groups of clients and select different email substance that they create, or I can create my own. I can edit what they've done. Anyway, it's a great system. I send an email out to clients about every 6 to 8 weeks now. So it's a little touch that I can do with clients. But they have an AI agent on their platform. So if I want to send out an email and I want to create my own, I just click on that AI agent and I tell it, all right, I want it to be about this and this. I want it to be short, long, or medium length. I want it to be formal or casual or what have you. And I want to give it either 100% or 0% or anywhere in between creativeness and click the button. Next thing I know, I've got an email that I can send, of course, with probably a little editing, which is phenomenal. It blows my mind. But that is just such a small part of what AI is going to do and can do, and I just don't understand what else it can do for people besides that. What can it do besides write a letter?
Well, I think the biggest thing that it's going to do is identify trends in data. So right now, we have people that go through and try to identify these trends. And I think that's probably going to be the biggest thing is identifying these trends and helping to forecast, even if it's a short-term forecast, even if it's the weather, even if we had a better forecast of the weather, that would help. But, I think the biggest thing that it's going to do, speaking to basically the number crunching and the data analysis is, in healthcare and in drug patents, new drugs that are being developed, we can really sequence the human genome a whole lot faster than we could if we had to do it manually ourselves. So it's going to come in that way, I think, and that's going to be the first way you see it is make a big difference in the human experience. I think is going to be in the healthcare space, and that's what's kind of exciting about it is kind of unlocks a lot for us.
You were talking, it just hit me. In our business, it may already be there, but I could see AI certainly being able to assist in creating a portfolio simply by us telling it, we got a 50-year-old, need income in 10 years. We want, moderate volatility. Just give it 10 or 12 parameters and then click a button and AI does it. Is that already available, or is that something that's coming in the future, you think?
I'm sure it's available. I think that where that one is going to fall short is, this, markets and this whole finance thing, it's not just a science. It's also an art. There is an art to it as well. And that's the piece that I think that AI is just not really going to capture. If you just want to run efficient frontier analysis to maximize return per unit of risk, we already do that now. There's software series that do that now, but the client may have certain constraints. Again, where the rubber meets the road in markets, there can be some friction as well when you get into, certain stocks or even certainly certain bonds where, supply and demand imbalances make markets inefficient. And so it's almost like trying to take a rational model and putting it over the top of an irrational subject. There's going to be areas where that breaks down, and that's really where I think humans are going to be able to add value. There is the art side of it. Like I said, it's not just a science what we do. There's an art to it too that I think it's going to be hard to capture that artificially.
Very good. Paul, we're coming to the end. I do have a burning question I've had for you. I have been pronouncing your name Knipping. Is that right, or is the K silent?
You are right. It is Knipping. It's Knipping. German. The name's German, yeah. Most people say Nipping, but no, it's in fact German, yeah. Knipping.
Very good. Good. I appreciate your coming on the program. People like you are why I went out to Denver in 2006, kicked the tires, and decided to start using Genios as my broker-dealer. I wanted a small cutting-edge company where I could pick up the phone and talk to the president of the company if I wanted to, that kind of thing, because I'd been with the company for about 15 years. They'd been bought and sold several times, had gotten extremely large, and it just was a terrible situation. So just glad we ended up here so we could have people like you working for us. And just for the listeners' information, Paul is one of two CFAs with Genios Wealth Management, which is headquartered in Denver, Colorado, and they actually help manage portfolios that I utilize in my advisory accounts for clients. And I can send Paul an email or give him a call and say, look, I've got this client with X dollars, help me create a portfolio. And that's kind of what they do. So appreciate your work there, Paul.
Of course. My pleasure, Jim. Thanks for having me on today. I appreciate it.
Certainly. I hope you'll come back on sometime.
Anytime. I'd be happy to.
I've got music in my ear. That means I'm out of time. So as always, this is Jim Taunton helping you make all of your financial decisions good ones. Good night, everybody.